As you can see, Quicken greatly simplifies keeping the personal and business transactions that you do separate and organized. And you'll often find yourself in some cases where you'll be using personal funds in order to purchase something for your business. And so when that is the case, you would be using a personal account. And this is indicated here in this account that's called checking to. You'll see that it's not part of the business. And if we go to the checking to, and you'll notice that there is a $700 balance there. However, what you did was you went to purchase books from a bookstore. And you'll notice that these books are going to be accounted for through the business account, business supplies. So we're going to now click Save. Now by default, if we were to look at the reports for our business, and we were to take a look at the business account, and we were to take a look at the balance sheet, what we'll notice is that the account called checking to, with now $678, is actually considered to be a business asset. And that's actually not what we want to happen. Because this is a personal account, we like to keep this separate from our business assets. And so what we do is we go to the Tools area, we then go to Manage Hidden Accounts, and then you'll notice that there is a box here that says Keep this account separate. We would click that box, and then we'd click Done. If you go back now to your financial statement and you go to the business area and you go to the balance sheet, what you'll notice now is that that account is no longer being counted as a business asset. So in order to account for this properly, what we would do is we would go back to the personal checking account, and you'll see here that the category still says that this purchase was made for business supplies from our personal account. And we could leave it that way and it would be perfectly fine for our business financial statements. However, technically what we did at that transaction was we really transferred funds into our business. And so the most correct way to do this would be to change this category to a transfer to our cash on hand, and then to click Save. What that's going to do, you'll notice, is that that's going to change our business cash on hand account. It's actually going to go up now by $21. So now what we'll need to do is on the 18th, so we'll actually need to then create an outgoing transaction saying that we spent funds from our cash on hand account. And so all we do here is we write in Barnes & Noble. We then write in the correct category. In this particular case, this is a business expense. We would then leave this as $21 that we actually spent. And then we'll click Save. What's going to happen is that we're actually going to have a transaction there that occurred where we had $21 that was actually spent from our business account. But we properly reflected the fact that we actually took money out of our personal account, we put it into our business, and then we spent it out of the business in order to purchase the books. Now again, you could avoid all of that and just do the very simple transaction of making sure that you account for the fact that you spent personal funds for your business. However, the most correct way to reflect this would be that you put money into your business and then you use that money to actually purchase your business books. Okay, so with that, thanks, and I will see you in another video.